Hello and welcome to the What the Finance podcast, where we talk to experts about all things finance. If you get value out of this episode, please subscribe so you don't miss out on any in the future. I hope you enjoy.
So, Jason, thank you so much for joining the What the Finance podcast today to talk about your recently released book, How to Day Trade Like a Rocket Scientist, a complete beginner's guide to day trading from the perspective of a NASA engineer and quant. So my first question is sort of how did your background as a rocket scientist give you a unique perspective when you were learning how to trade?
Yeah, hi. It's funny. So a lot of what I do, I'm an electronics engineer. So I do electronics reliability stuff for all the missions at NASA JPL. So that's the NASA facility out in California. And as a reliability engineer and working on electronics and computer memories, sometimes maybe we're flying a whole bunch of electronics and we want to know, the likelihood that they're all going to survive, or maybe we just need one of them to survive, something like that, if we're flying 10 different memories. So you're doing a lot of statistics and probability and reliability stuff. And when I got into day trading, it's all the same kind of numbers game. It's all statistics and probability. It's gambling. Day trading and making that trade is, you're rolling the dice. It's closer to playing blackjack or craps than it is anything else, or, shooting a basketball. All of that reliability analysis, data analysis, programming, all that stuff I was doing at work for the last 20 years, I found to be totally applicable to day trading. And so as I was learning to trade, I read at least 20 different books on trading, and the whole while I'm taking notes. I'm like, why isn't anyone talking about this or this? I'm just taking notes, and eventually after about 2.5 years worth of taking notes, I felt I had enough to write a book, and I always wanted to write a book. So that's what happened.
Yeah, definitely. And can I ask, how did you get into trading? Did you just sort of find it one day, or did someone influence you?
Oh man, it's so funny. So this was New Year's 2018. I've always wanted to get into trading. I mean, when I graduated from college in 2004, I was super interested in the stock market, stuff like that, bought all these books, never read any of them because I was so interested in other things along the way. So I got involved in all these projects over the years. And finally, when I guess I exhausted that list of other projects, then I finally got into trading. It was New Year's Eve, 2018. I was at a New Year's Eve party, and a friend of a friend I met there was telling me about his roommate who was trading cryptocurrency. He was trading Bitcoin, and he was making a lot of money. And he had this really cool scheme where, so back at that time, he had this crazy arbitrage opportunity in Korea. The price of Bitcoin in South Korea was much different than the rest of the world. Yeah. So he had a partner in Korea and a partner, I think, in India, because they needed a shell corporation to get this money out of Korea. But they were basically just cycling money through the US and Korean markets, and they were able to get the money out of Korea into India and then back into the US markets. They're just circling this money, this huge arbitrage opportunity. So I think the price of Bitcoin in Korea was like $8,000, but it was like $11,000 in the US. So, they would buy it in Korea, sell it in the US, and then just recycle it back into Korea. And they just kept exponentially growing their money. He just made a killing over a matter of months. And so I heard about that scheme. I didn't have a partner in Korea or anything like that, so I couldn't do what they were doing. But, I just became fascinated with trading cryptocurrency and stuff like that. So that's how I got into trading. And I tried to do my own, form of arbitrage where I was trying to build this, complicated automated software that would basically look for arbitrage opportunities between the markets. But I never made any money doing that. I spent about 9 months writing the software, got nowhere with it. And then about that time is when I bought Andrew Aziz's book it's called How to Day Trade for a Living. It's #1 selling book on Amazon about, day trading. And that's how I originally got into it. And I joined his community and I learned that way, and just kept reading other people's books. And and then that's how I just got into day trading. I met that guy at a New Year's Eve party.
It's crazy. Yeah, that's a crazy story. And then do you think, so you talked about before in the first question, sort of like how you had your mathematical mind, and you say it's like sort of, especially day trading, similar to gambling. Is that something that you sort of see other people treat it as, or do you just see other people, treating it differently?
No, yeah, I do. I see most traders treat it a lot differently. They're very emotional about it. I feel like they feel like they're in control of every trade, which is not true. Making a trade, it's gambling. It's more like shooting a basketball. Steph Curry can't control every shot that he takes, right? He's happy to make his 40% of his 3-pointers, his 50% of 2-pointers, and 90% of his free throws. he misses one, he's not going to let that ruin his day. He knows what his percentages are. But I see a lot of traders do get really emotional about it. And when they see a trade go south, they feel like they're not in control of their trading anymore. And so you see a lot of beginners, their first instinct is, oh, I have to fix my strategy. Something's wrong with my strategy. I'm not doing this right. But that's not true. It's, it's gambling. You can't win every single one. And so, yeah, I feel like more people need to treat it as a probability game. And, so that's one of the things I talk about in the book that's really important is you don't look at every trade, but you're looking at blocks of trade. It has to be a minimum of 100, really. So you look at, you're looking at 100 trades. And if that's going really bad, then maybe you are a bad trader. But, if you lose 5 or 6 in a row, that's just part of the statistics and probability. You can't really control that. So, yeah, I think that's really important is, you just have to keep trading and look at it at a macro sense and hope that in the long run you're winning. But yeah, each trade is not that important.
Yeah, definitely. And you mentioned there sort of obviously some people, they just change their strategy after every losing trade and you can't get an idea of sort of if it's actually working or not.
Also guilty.
Yeah, I've done that as well. I think everyone has to do it to start with. Are there any other sort of big mistakes you see, especially new retail traders or just retail traders in general making similar to that?
Yeah, it's funny, you can read all these books on trading. There's a lot of good advice in all of them. And yet for some reason, we all ignore it for some reason. How many times do people say buy low and sell high? That's the first thing you learn about the stock market. You're 10 years old, right? You hear someone say buy low and sell high. And now, the common phrase is buy the dip, And so I see this all the time, and I did it too at first. I did it every single trade. When you're trading the market open, the market fluctuates very quickly. It's very volatile, lots of high volume trading. And so as soon as you see it going up, so you see that candlestick chart trending up, you buy at the highest point. That was my first instinct. I see this thing going up, I'm going to ride it to the moon. When, of course, as soon as you buy, it's going to pull back a little bit. And that's the time you want to buy. But your instinct is, wow, I'm watching this candlestick go down, so I don't want to buy here. It's about to tank. It's about to take a highway to hell. But that's not true. You look at the trend and the range that it's trading in, it's bouncing up and down through a pattern. And you want to buy at the bottom of that pattern and then continue to watch it rise. And everyone you learn to trade from says that, but yet new traders don't do it. It's really hard to trade while you're watching that, to go long on a stock when it's actually ticking down. So that took a long time to get used to, but man, that's the biggest change that made the biggest impact on my profitability immediately was just that one little thing, just waiting 4 seconds before entering a trade. And then, riding that momentum back up, God, that changed everything for me right there.
Yeah, definitely. I know for you. So I know for myself, I don't normally go down to even below the hour chart, but I know for yourself.
Yeah. Have you ever day traded before?
Oh, I've tried. It's not, it's like, some people, yeah, you just feel like your mind's going crazy when you see all the charts and everything going like that.
Yeah.
I have tried a little bit, but not too much. But yeah, so for people who you're talking about sort of the 1 minute and the 5 minute charts, especially at the market open when there's massive volatility, and that's sort of your strategy, isn't it?
Yeah, that's what I like to trade. After the first 45 minutes, it really does it's just kind of slow to me. That's not, and plus for me, I feel like the longer the time frame, the more uncertainty there is. And of course, that's true in some cases, but if you're talking weeks or months, a lot of people can say, look, Amazon's going to be up in 6 months from that. They know the market well enough. They know the fundamentals. And so they're really good at that. But for me personally, I feel like I have more control when I'm just doing very short time frames. Like, here's what's going to happen in the next couple minutes. I just want to get in and out. I'm putting half of my entire account into a trade at a time. Yeah. Just in case I need to be in 2 trades at once. Otherwise, I would use my full equity and buying power on every trade. So that's how I like to trade. I like to get in, get out, and just hope that the law of large numbers favors me in the end.
Yeah, definitely. And sort of a key message throughout the book, and I think it's one of the most important messages you mentioned, is sort of binomial distribution. I think you mentioned that before. So can you explain a bit more about that and sort of why should traders give it their attention?
Yeah, so this is everything. And if you're going to look at trading as gambling, then you have to learn what the binomial distribution is. And it sounds like, it's a weird name. And so people, are maybe turned off by it. No one wants to get all nerdy with the mathematics and stuff, but every successful trader, especially every hedge fund manager, everyone who's ever worked at a hedge fund, these are all math geniuses. And, the binomial distribution is, like tying shoes is to us. This is just the tip of the iceberg for them. So they all know it inside and out and understand what it means. But it's basically the binomial distribution is just, here's the distribution of outcomes you have for something that's going to happen. So for example, just say we're looking at, let's say there's a 20% chance of rain every day this week, right? So what's the likelihood it's going to rain 0 times? Or what's the likelihood it's going to rain 7 out of 7 days, or 3 days, or 5 days? So the binomial distribution builds up that distribution for us and tells us, okay, if there's a 20% chance of rain every day this week, here's the likelihood it's going to be 2 rainy days. Here's the likelihood it's going to be 3. So that's the distribution you build up, and the binomial distribution calculates that for us. Same with flipping a coin. You flip a coin 10 times. How many out of that 10 is going to be 10 heads? Or what's the likelihood of getting 0 heads? That sort of thing. So same thing with trading. So if you're a trader that has a 60% win rate, well, if you make, let's say 15 trades, well, what's the likelihood of winning all 15 trades? Or what's the likelihood of just getting 5? And so once you get familiar with that, you start to understand that, well, even if I'm a 90% win rate trader, there's still a likelihood I can lose 5 or 6 trades in a row. There's a likelihood I could lose 10. There's theoretically a likelihood you could lose 1,000 trades in a row, even if you're a 90% win rate trader. That's not going to happen. The entire universe isn't old enough to allow something that remote to happen. But once you get the feel for that, then you get more comfortable with trading, and you don't get bummed out when you lose a trade anymore, or even if you lose 5 in a row, because then you understand that is going to happen. It's inevitable. There's no way you can control that. Even if you're a 90% win rate trader, you're going to lose 5 trades in a row. It's going to happen. There's nothing you can do about that. So I feel like that sort of decouples you from the emotions of trading and says, look, this is just a numbers game. There's absolutely no way you can avoid that. And then you just start to sort of take a step back and look at it from a macro sense. Say, look, really what I got to do is just take a batch of 100 trades and see how that's going, and start analyzing blocks rather than just getting so emotionally tied to every single trade. And so, that all starts with the binomial distribution and understanding of that. And you just sort of treat it like gambling, I guess.
And yeah, that's interesting. As you said, it's looking at it in such a practical way. It's sort of decoupling yourself from the emotions that you could go through, where, as you said, if the candle's going against you, then you get out of it. But you're like, hang on, I have my strategy here. I need to stick to it and see if it's actually going to be successful.
Yeah, and you can also use the binomial distribution to calculate what is too many losing trades in a row. And so, when I was writing the book, I sort of came up with this number of 9. If you're like a 60% win rate trader, which, most traders are kind of around 60, 70%, profitable traders at least. So if you do hit 9 losing trades in a row, that is statistically significant. And if you lose that many in a row, you should step back and say, whoa, what's going on here? Are my hotkeys wrong, or what's going on here? So yeah, it does help you, so now you know that if it's 5 or 6 in a row, don't freak out yet. You're going to be okay. But once you get to maybe about 9, then something is wrong. And so then you do know where your limitations are, and what is the limit on that. So yeah, I think that kind of math and stuff, I had all these questions when I was learning to trade. And then, so I started looking into this stuff, and I like having those kind of well-defined boundaries and understanding of my trading and risk management. So I know exactly what's within expectations and what isn't. And so, yeah, I found that stuff really, really helpful. And, those kind of calculations are what I had been doing at work for 20 years already. So, just sort of popped into my head, I guess.
You used to, yeah. And maybe that's why I know sometimes I see anything maths and I just avoid it like the plague. But it's important trying to, a lot of these things, they just have these jargon, but once you get underneath it, it's actually quite simple, isn't it?
Yeah. And, not all traders need to be that rigorous with the risk management. I mean, obviously there's millions of successful traders before I published my book a month ago, so, they don't necessarily need to know that, but it takes you, I feel like a lot of the day traders that I've come to learn get to know the last couple of years, it took them years to get good at it. And they're just basically firing from the hip, just grinding it out. They wipe out their accounts usually multiple times along the way. And because they're just basically in a massive trial and error experiment trying to find something that works for them. And they spend a lot of money and many years trying to get there. But had they just been a little bit more rigorous about their approach and done some of the things I talk about in the book, it would have been much simpler, much more straightforward. They could have gotten to profitability so much faster and a lot less pain and anxiety along the way. So yeah, it's not the only way to do it. You don't have to dig into the math, but I think it makes it so much easier.
Yeah, definitely. And are there any other sort of key pieces of math that sort of from your profession and maybe other hedge fund managers use that most retail traders have no idea about?
I mean, I think that's the most important one. I mean, because that's kind of sets up your whole risk management approach. And so that's really the most important thing. And then the rest of the sort of math in the book is just more about, how much you should risk per trade, things like that. There's not a whole lot of math behind that sort of stuff. It's pretty straightforward. But yeah, that's definitely the key one. But I mean, once you go to those hedge funds, I mean, those guys, I mean, they're doing all kinds of, machine learning and artificial intelligence, pattern matching, pattern recognition. I mean, what those guys are doing, there's no telling. I mean, they're just scores of PhD mathematicians over there, and there's no telling what they're doing over there.
Yeah, I think they don't like to give it away either, do they?
No, not at all.
No chance we'd know. So you sort of mentioned there something about risk management. So do you want to maybe talk more about your risk management strategy and then obviously what you talk about in the book with it? Because I think you said it's one of the most important aspects for a profitable trader.
Yeah. So when you're trading, the first step is, well, how many shares am I going to buy? How much am I going to put into that trade? So that's sort of your first step to risk management. And so you don't necessarily want to, you don't want to risk 10% of your account. You don't want to so you get into a trade, you don't want to let that trade go against you to the point where you've lost 10% of your account. If you have 4 losing trades in a row, which we should expect to happen, because like I said, we're not, losing streaks are inevitable. If you let 4 losing trades happen and you lose 10% per trade, well, pretty soon you have less than half your capital. And that's inevitable. So I think, so starting just there, I think the most you should ever risk is 1%. 2% might be okay, but even then you lose 4 or 5 trades in a row. Now you're down quite a bit of capital, and you're going to have to win more trades than you lost to get back to break even. So 1% I kind of like. And also too, if you're risking more than 1% of your capital per trade, it's actually often difficult to afford that number of shares. And so I like to leave it at 1%, because one thing I also like to do is I like to keep my wins and losses the exact same size. So my winning trades, I want those to be, say, $200, and my losing trades, I want those to be $100. If you have a 2-to-1 risk reward ratio, and I want that to be the same for every trade, so that when I'm reviewing my trades, it's much easier to analyze what's going on. So, in order to keep those wins and losses consistently sized, you really can't. You can't put your stop loss more than 1% of your capital. Oftentimes you won't be able to afford the shares, and then now your wins and losses are different sizes. And so I talk about that a bit in the book. And so, yeah, so, 1% max loss per trade. There's a lot of people out there who set daily goals for themselves and max losses for the day. I think all that's complete nonsense. It'd be like Steph Curry or someone scoring 40 points in a game. Like, no, I'm good. I got my daily goal here. I don't think I need to score any more points. That's ridiculous. You want to, if the trades are there and the opportunities are there, then you want to take them. Why pass up on money? I don't, I think that whole psychology of day trading, I think, is just a farce, really. There's all these psychologists, trade psychologists, and they write books about it. But there's no reason for it. If you just develop a risk management plan and stick to it, there's no need for all that. So, people just let their emotions get into their trading. But yeah, so I don't believe in daily goals or anything like that. If the trade comes and matches your setup, you should take it. You want to be taking as many trades as possible that match your criteria. So, maybe some days, maybe there's 0 that meet your setup, so don't take any. But or maybe there's 5 or 10, but don't stop because you're ahead. If anything, that day, maybe those market conditions favor your strategies and setups. So take all the ones that are coming to you. Don't stop after, winning one. I don't understand that stuff at all. So yeah, that's one thing that I think is different about my trading than a lot of other traders is, everyone you talk to on Discord or Reddit or wherever, Twitter, everyone's like, oh, hit my daily goal in the first trade, I'm done for the day. I'm like, well, why did you quit? You just, who knows how much money you just lost out on the rest of the day. It makes no sense to me. And yet these same traders will have a max loss that they'll let themselves get to. And it'll often take like maybe 2 or 3 trades to get to that max loss. So they're allowing themselves on some days to take 3 losses, but then they exit after 1 on others. That's a complete opposite of risk management, which is to maximize your wins and minimize losses. And what they're doing is the exact opposite of that. And so, yeah, things like that, I think, it's very different between my style and some of these other traders. Yeah, that stuff just doesn't make sense to me.
Yeah, and you're almost ruining your odds, aren't you? Because if you, as you said, if there's opportunities there that fit your exact strategy, you're not actually testing it to see if it's successful. Those trades that you may have missed out of could have actually proven this is going to be successful and then made you stick with it.
That's exactly right. I mean, you want as many trials for your strategy as possible, and to get to that 100 trades as quickly as possible so that you can analyze and see if it's working or not, and move on, make adjustments if necessary. So yeah, I think, take as many as you possibly can.
Yeah, definitely. And so one thing I'm seeing is everything's very systemized. So there's a sort of a plan beforehand. There's a strategy beforehand. Is that something that you make sure is there? Everything that you do has been pre-planned almost to the T.
Almost. I mean, except for with day trading, some people would like to think that they could just maybe write software to do the trades for them, like program, here's my setups. I don't know if that's really possible for the strategies I take. So, I know how I like to trade, just basic momentum trading. Here's a stock that's going up, so I'm going to write it up. It's pretty simple trading. But, I don't really, you never really know what's going to happen in the heat of the moment. The size of the candlesticks are often hard to predict. So, exactly where my stop loss is going to be and how to enter that trade is something you're always getting used to and getting better at, and just takes time and hours of looking at candlestick charts. So yeah, I know how I optimally want to trade, but in the heat of the moment, it's not always that easy. And sometimes I just pick horrible stop losses, and then, because I'm trading the open, and those candlesticks are going to look a lot different than the pre-market candlesticks. And so it's hard to predict, well, how big the candlesticks, and you don't want to set a stop loss right in the middle of a candlestick. It's like way too close. The price action's crazy. You're going to get stopped out immediately. And so sometimes that happens. So yeah, I mean, there's still, as much as you want it to be completely systematic and planned out, yeah, it's still an art form in a way, and you have to do your best when the time comes.
Yeah, definitely. And that's when you say, I think in the book you mentioned, some traders wait a few minutes after the open. Some traders may wait sort of 15 minutes just to sort of get an idea of what the chart's doing, and, what is this a good setup or is it not?
Yeah, definitely. Yeah, that helps a lot. Just wait a few minutes, get a feel for the market. You and I were talking about the US Open a few minutes before we got started here. And, a lot of tennis players will, once they start a match, they're kind of getting a feel for it. They feel each other out. They're not really going for winners the first set or anything like that. It's the same. I kind of feel the same way when I'm trading. It's like, I want to see the price action evolve, see how that ticker is going to trade that day, and wait a few minutes to see what's going to happen.
Yeah, I know Djokovic especially. He's just like dead for like the first set, and then he'll just elevate his game and absolutely smash the other opponents. So I guess that's, as you said, it's just seeing what's going to happen and then go from there.
That's right. Yeah.
Yeah, perfect. So sort of what would you say are the biggest lessons the market has taught you?
Biggest lessons. So the biggest lesson I'd say the biggest surprise maybe is just how competitive it is in there. I mean, of course, everyone knows the stock market is competitive. Wall Street's competitive. You've got a lot of smart people trying to make money on Wall Street. But yeah, I guess you don't really understand what that means until you're actually in there trading, especially in like a direct access piece of software like DOS Trader, where you're seeing the ticker tape, all the orders come through. You're watching the price action. And you realize there's a lot of forces going on here that's impossible to predict. I think 60% of the trading now is high frequency trading. So it's just computers trading anyway. And all those algorithms competing with each other, and then institutional traders and retail traders. And that struggle, I mean, it's wild. And yeah, it takes a while to get used to watching that action in the morning. I really wasn't prepared for just how fast the market moves and how wild it is. I didn't know that before I started, reading books on day trading and actually trying it out. And yeah, so, I feel like, the biggest lesson I got from that is if you think you're just going to like download Robinhood and start winning trades, on your phone as a day trader, you're not going to beat these guys. You can't do it from your car on your lunch break. That's not the way to win day trading. If you want to beat the best, you have to be at their level or better. And so you have to be prepared. You have to have a proper setup. You need something like this. You have to have a desk dedicated to it. You can't be doing it from your car. And you just have to work at it for months or years and just spend hours and hours looking at candlestick charts. And, just like anything, if you want to be a great basketball player or whatever, it takes time, it takes years. You have to educate yourself. You have to practice. You have to be in simulator. You're just not going to step out there and beat Djokovic. That's not going to happen. So, it's very highly competitive and you have to practice at it just like anything else.
Yeah, definitely. And I think one thing you mentioned there is sort of the setup. And I think what you mentioned the book, I think you said you spent 6 months on a simulator or on a demo account where you didn't actually trade any money. Yeah, at least. So you were actually sort of honing your strategy. And I think sometimes, I know myself, I just jump straight into it, and then you don't realize, as you said, how competitive it is. But sometimes you just have to, as you said, take a step back and just analyze it and watch it and learn from actually doing it.
Yeah, and there's nothing wrong with, there is something wrong with it. You'll lose a lot of money, but you can't just jump into it in the deep end and hope for the best. But, it'll take you many years to really figure it out and become profitable. And you see a lot of people on Reddit or Facebook, they're posting like their equity accounts from their Robinhood statements or whatever. And it's just flat. It goes like this. And then one day they have one good trade and it goes straight up because they have one good trade. And all of a sudden they think they're professional traders. But, a professional trader account is a nice, steady incline, right, over months. These guys are just sort of jumping in the deep end, throwing money around, gambling, throwing spaghetti at the wall. And, if you do that for enough years, you might figure out something that works for you, but you'll lose a lot of money along the way. So I think, and what's great about trading is, in the simulator works the exact same way as live trading. It's the exact same market data. The only thing that's different is, you're not getting filled at the exact price you would get filled at if you were actually day trading on a live account. But for small accounts, it's going to be pretty much the exact same anyway. So that's the beauty about trading in simulator is it's just like the real thing. And so you can spend months there learning and practicing without losing a single dollar. And so why not do it that way?
Yeah, definitely. I think sort of there's not much things like trading where it's like you win or you lose and someone else wins. You win, someone else loses. And I think that's something it's very cutthroat, isn't it? As you said, it's like, it's literally like if you lose, you're helping out someone else win. So I guess it's very competitive in that way as well.
Yeah, it is. And so the one pitfall though about simulator, and I did this too, I had to go back to simulator because I messed this up. When you're in simulator, you might get a few good days in a row. And all of a sudden you think you're a professional trader. And also too, you sort of have this FOMO because like you're seeing these great trades, like you have one good week and you're like, dang, if I was just playing with real money, I could have made $2,000 this week. And you're like, dang it, I got to get into the real money because I just saw $2,000, I just missed out on. And then inevitably that next week, you're going to trade like crap as soon as you open your real money account. And so one pitfall is, that happens all the time. As soon as you get good at it, one good week, you're like, dang, I just missed out on all that money. I need to be using real money. But you have to try and avoid that. I think you got to do at least 3 months of good trading and then get out of simulator. But it happens to everybody. We become good in simulator and we want that real money. And just first thing you do is get out of there. But yeah, it's hard to avoid that.
Yeah, definitely, I can imagine. And I think one thing you sort of mentioned is being a part of communities and how helpful it is. And I guess sometimes they can influence you in bad ways, but also that it can be quite important. So why is it so important for a trader to sort of be a part of a community with other traders?
I think the number one thing is just watching other people trade. Just to see how they trade, talk to people about where they're setting their stop losses, how they handle that. just seeing, I mean, especially if you're new, you don't really know what day trading is. You don't know how people are actually interacting with their software, their platform. And so you just have to get with these people and see how it's done. See, how they talk about it, how they look for good trades, how they react to bad and losing trades, what people are doing to find stocks. And yeah, so you just kind of get in that community, get in that environment, learn the language and the lingo, and where do people get their news from? And you just have to immerse yourself in that world. And being alone on an island, you're never going to learn that stuff. You'll just flounder around, and especially now with the internet, there's so much information out there. You're just going to be lost in a sea of things. And just having a community and all those people that have been trading for years, they've already optimized the process. They know where to go for news. They know how to do everything every step of the way. So you benefit from that, and you're all stronger as a team that way. So yeah, I can't imagine learning to trade without that. I just think you'd be lost.
Yeah, definitely. It's sort of learning from other people's mistakes, isn't it, to sort of fast track your own progression?
Yeah, absolutely. And I think it keeps you accountable. I think it keeps you motivated. You learn people's names, they learn your name and face, and you don't want to be the one to disappear, or you want to be accountable and be a part of the team. And yeah, I think it keeps you going. Yeah, I think it makes it a lot more fun too.
Yeah, definitely. Especially when you sort of learning together and hopefully winning together. That's the
yeah, right. Yeah.
aim of the game. So Jason, thank you so much for sort of joining the podcast today and talking to me about your book. Sort of my last question is, what is sort of one message you'd like people to take away from our interview and your book?
I think, I'll say it over and over. It's risk management, risk management, risk management. I got one review on Amazon. They were too happy about my lack of candlestick charts and pattern strategy. They didn't think I put too much time into that. But I think I also said in the book that the candlestick pattern strategy doesn't really matter. People get so obsessed with all these patterns and funky names, 3 black crows or whatever it is they're trying to trade. That doesn't matter. It's all about risk management. You could almost enter the market randomly, but as long as you've prepared your trade and your risk management plan appropriately, you will be successful. And so as long as you just have a plan and stick to it, just stick to it. And it's tempting to jump out of simulator too early. It's tempting to mess with this stuff, but just don't do it. Just sit on your hands, follow the plan. And Joseph Burns on Twitter says all the time, trading is boring. And so, and it really is. You set your parameters, you follow it. It should be super boring. You shouldn't have to think about it too much. And as long as you treat it that way, treat it as a gambling, a numbers game, it'll be boring, but it'll be profitable, and you'll enjoy it.
Yeah, I think that's sometimes the issue. If people enjoy it, they enjoy it too much, or they get too into it, and then that's where you can go against sort of your strategy, isn't it?
Keep it simple.
Yeah, it's perfect. Awesome, Jason. Thank you so much. So if anyone wanted to buy a book, or I know you have a website as well, where would they be able to access that?
Yeah, RocketScienceTrading.com is the website. The book's on Amazon. It's an e-book right now. I just ordered proofs of the paperback, so the paperback should be ready in a few weeks too.
Awesome. Jason, thank you so much.